Hi. Good afternoon, everybody. Post lunch, immediate sessions after post lunch are always difficult to handle because you may feel a bit sleepy, but I'll try to wake you up. So I have a question to start with my presentation. How many of you have not heard of any one of these names? Virajpet, Ketwa, Sirsi, Kenda, Simga, Bhattasan. How many of you not heard these names? Not heard? None of you have heard. Okay. So these are names of small talukas and villages and towns in this country, which are actually growing at the fastest possible rate, right? And that's what's happening in Bharat. Bharat banking strategy of Axis Bank is all about bringing one axis to play to service customers in Bharat banking markets, and I'll cover that in detail. I'll cover in five sections. The first one is I just briefly talk about the opportunity in Bharat and what does it look like. All of us, these are large and growing markets. The cities, the name that I just took, when I travel deeply into the country, the kind of development that's happening, it's reflected in the numbers out there. The markets are large. They are growing at a very fast pace, both the credit and the liability markets at pace which is higher than the rest of the country in many cases. And a lot of development that's happening is manifesting itself in huge amount of credit growth, which is also leading to a restart of a capex cycle in these markets. We're also seeing that the private banks are actually gaining market share in these markets on the back of formalization of the economy and also on the back of taking away market share from PSU and other smaller local banks, etc. When we look at India, when you look at the road network, I'll quote John F. Kennedy. He said that American roads are not good because America is rich. He said America is rich because American roads are good, right? So the work that's happening in the country on developing infrastructure in the market, the time that it would take for a person to go from one place to another, creating market linkages for farm economy, etc. The road development has actually played a very important role in deepening the inroads into the markets and giving access to the farmers and towns to bigger markets, and that's actually playing out. Even when you look at the nighttime luminosity in these markets, the 99.9% households, etc. today have electricity in the country, and that was not the case. I mean, even when a few years back, when you would go to travel from Delhi to Meerut, for instance, it will take you 6 hours from Delhi to Meerut. I mean, it takes less than possibly 2 hours today. And I'm looking at some other stuff that's happening even in trains. All this new train system that the government has started, Vande Bharat, is shortening the time to half that it would take to go from one place to another, and that's having a deep impact on the country. The next is the financial inclusion is also, we've talked enough about Jan Dhan over all these years, and we know enough about Jan Dhan and the Jan Dhan Trinity and Jam Trinity, etc., and the new accounts that are getting opened and formalization of financial inclusion, etc., etc. But the important part is that when you look at the rural and semi-urban markets, the number of internet users in these markets are higher than number of internet users in other markets. When you look at the formalization of data, when you start capturing data of these transactions, now that data enables us to underwrite the customers much, much better. And that's the real impact of the entire Jan Dhan thing that's playing out in these markets, right? We're also seeing deep investment by the government in this sector. I was visiting a FPO, a farmer producer organization in Mirzapur district in Uttar Pradesh, and I saw in the yard of that FPO there were some bags lying with Korean language written on it. Okay, and I asked why is Korean language bag lying here, and they said that we are exporting wormy post to South Korea, right? And there's a farmer producer organization making use of waste materials to export to export the end product to South Korea, right? And that's the transformation that's happening in the country on the back of farmer producer organizations, more and more corporatization, more and more building of ecosystems by the government, etc., and investments into this sector. I mean, government has given a target of 20,000 FPOs to be set up in this country, right? And many of them are getting formalized. And we think that if that infrastructure alone is developed properly, the increase in farm incomes and which is already at 1.3 to 1.7 times of what it used to be before, the increase in farm incomes will be substantial because it will optimize the economies of scale for a group of farmers, and that's what it is. And the beauty is that large part of this thing is happening through women. Even this Mirzapur FPU that I visited, the 60% of the farmers holding 1.5 acre or less of land were actually women. So, and that's where the income is flowing. And this presents number of opportunities to us, to a bank like us, on multiple fronts. You could lend to them, you could do forex through them, you could do, you could offer to the FPO some other products, and NABARD offers on top of it a guarantee program to lend to FPOs. So the government is actually trying to enable credit flow to these markets from end to end, through multiple use of multiple players in the ecosystem. I'll come to the non-agri space. All of us keep reading about GST, collections highest ever and stuff like that. It's just going on, and the government is actually bringing in a lot of investments into the MSME space as well in deep markets to formalize the entire play. Now, all of this has an impact on the data that we have on these customers and help us lend better to these customers on top of the thing that Balaji talked about today about the use of the farm, satellite data, etc. So all of that, when it comes together, it helps us underwrite these customers much, much better. I'll talk a bit about, since it's the first time we're talking about Bharat Banking, I just want to tell all of you as to what Bharat Banking is and how do we look at Bharat Banking and how is it defined within Axis Bank. Bharat Banking is a manifestation of the one Axis approach of taking all the products of the customer to a set of customers. So all the products of the bank to a set of customers. So we're not taking a product view of this business. We're taking a customer view, saying if a customer comes, how do I service that customer in a multi-product environment through branches or partnerships or some other digital, so that we can keep our costs very low. So Bharat Banking is a unit which works both vertically and horizontally across the length and breadth of the bank. There are some businesses which we deliver end-to-end across all 4,800 branches of the bank. And there are some products in which we work with the rest of the bank to formalize processes and policies and solutions to deliver and provide more coverage of those products in these deep markets. For instance, if a branch is there in a rural unbanked area, how do you get education loans in that market? Or how do you get how do you deliver affordable housing loan in that market? So and what is the delivery process? How do you ensure that we do not have to cover that market by putting just people in those markets, but finding some other way of delivering solutions to the customers in those markets? Because when we look at the CIBIL data, when you look at the customer inquiries that are coming in these markets, the number of inquiries are by a magnitude of 2x more than the growth is 2x more than the number of inquiries that are coming in metro and urban markets. So these markets are growing and likely to grow at a higher clip than the rest of the industry. So we think that by connecting all the dots across the bank, we would be able to successfully bring the entire Axis product suite and solutions to a set of customers in these markets across category of customers, include individuals and firms and enterprises and companies. Why do we believe we will win? Axis Bank has got large distribution in these markets already. We have a large customer base who we can go to and find solutions for them. Key is to ensure that we deliver at the right cost and at the right credit cost. We have deep relationship with rural-centric corporates through our corporate bank. So we work closely with the corporate bank to find solutions both downstream and upstream for customers within the corporate bank, and partnership with marquee names in the country. And we have a lot of depth in this business also because we've been doing this for 20 years. All the products, and we have a significant level of maturity in these products. We have proven lending and underwriting capabilities in this business, because the credit losses are contained at this point in time, and it's been built. The learnings have been built over a period of time. We also have a big government business portfolio through the government business team in the corporate bank, and we work with those guys to ensure that we work on the government schemes and wherever it's useful for us to take that deep into the market. And we have a strong brand in the rural and semi-urban markets. So this is what Bharat Bank is. We have a deep distribution. We have 65 branches. 43.4% of our branches are in these markets. 659 districts of the country we cover through Bharat Banking markets. And we have a 54,000 plus CSC Valley network and about 134 BCBO outlets. In the last few years, and especially talking about last 1 year and this year so far, we're seeing strong growth momentum. Our disbursals have actually gone up by about 85% in the first half of the year, albeit on a low base, because last year first quarter was a bit low, but we're seeing strong momentum in growth. We're also seeing 44% growth in gross book of rural-centric products at this point in time. Even retail assets delivery in these markets, we're seeing about 43% growth and about 15% growth in our liabilities book from Bharat Banking branches. And the growth is not limited to a few products. It is spread across products: microfinance, gold, farm equipment finance, farmer finance, enterprise business, MSME business, commodity finance. We recently got an award from WDRA as well for being one of the largest commodity finance player. And we do that business with a lot of risk guardrails, etc. in place. So that's something that we are building. And this is on the back of new products and propositions, policy enablers to improve coverage, as well as simplifying the processes of delivery to customers in these markets. The growth is in and by itself does not mean anything as if it does not translate into profits for the bank and help us improve our return on equity. We're seeing 37% growth in operating revenue of rural-centric products. We're seeing 49% growth in PPOP of the book. We're also seeing, one of the key themes, and Amitabh talked about is Spursh. We're also trying to, adopt the entire Spursh thing in this market and deliver better to customers so that they get better customer experience, faster turnarounds, good decisions, good communication, and good engagement. We also periodically do a survey through an agency of NPS, and we are in some of our products we rank number 1 as we measure it, as an agency measure it, independent agency, in number of products that we deliver to these customers in these markets. So we rank number 1 in NPS across the key players in the market. Like I said earlier, we're trying to connect the entire bank together through a comprehensive product suite. We work across the bank. So, for instance, I was in a mandi near Mehsana, Uncha Mandi. It's the largest Zira market in the country, and we sense that we have a reasonably good market share in that mandi. But when opportunities come, because you're dealing with enterprises, etc., we saw that 40 or 50% of the total market flow that happens through that mandi is actually exported. So you find such solutions for customers in these small markets and start giving them solutions across the length and breadth of the bank. And you put export finance out, you put forex products out, and you start seeing an increase in your revenue across the product lines, right? So similarly, when I was in a mandi near Rohtak, and we have a high market share in those markets, the mandi system, and I'll talk about it in a bit. Mandi ecosystem is the one place where the entire Bharat actually comes together. The commercial transactions happen there. So going there and finding out opportunities both for individual products as well as for MSME, it's a phenomenal opportunity. And we think we can, by connecting the dots across the bank, we can deliver to it and grow at a much faster pace. When we look at Bharat Banking, these are the 5 key areas of delivery. We want to grow our market share, and we want to grow at 2x the industry average. We want to expand the risk-adjusted NIM of the bank. We want to build a low or lowest distribution cost model with digital at the core. We want to move from a product-led to a customer-led model with sharp focus on product coverage and making the bank organically self-sufficient on priority sector. So ecosystems is one thing that we want to go. So given the risks, and Balaji talked about it, given the risks in this market, we want to be sure that we do not extend ourselves too much on the risk side. So one of the things we're trying to do is that we're saying that we will deal with those customers who are either part of a larger ecosystem or there's an underlying transaction at play. Because if the underlying transaction is something at stake for the customer and you participate in those ecosystems, the behavior of the customer is far better because there's some transaction that is underlying and there's something else at stake. So it becomes imperative for us to create or participate in multiple ecosystems, and we are doing that across the the value chain. So we have proprietary distribution, which is our branches. We are building distribution networks with players like CSC. We are working with large rural corporates. We're working with fintech companies. The new age fintech companies like Stellapps or company like Argos, which are building independent solutions for farmers and for milk supply chain and or for grain supply chain, etc. So that's something that we're working on, and also building relationship with NBFCs to offer them complementary products which they cannot offer to their clients, or they have not chosen not to offer to their clients, or doing co-lending with them. So working in this ecosystem, we think can not only help us improve or reach further for lending products, but also help us get access to more customers with whom we can do much more than just lending to them. And we're seeing strong, green shoots in several partnerships. We started with CSE a couple of years back, and we've seen about 2x, 3x kind of jump, and we think it is just a start for us. Reaching through the larger set of customers through CSC village level entrepreneurs who are mapped to all the branches in the country is something that we are deeply driving, both for asset and liability customers. We've seen huge amount of momentum. There, for instance, this year, in the first 6 months of the year, we already done 2x of what we did in the entire year last year, and we think it can keep doubling every quarter because the reach is huge, and we just not there fully as yet because our digital solutioning is still underway. Similarly, we're seeing some of other partners. We're seeing 4x growth in disbursements from a gold loan partner. A monthly run rate of about 10-20,000 accounts of CASA, etc. 70% growth in our supply chain finance working with large corporates. This is something that is the way we're seeing strong evidence of delivery already. I talked about mandis. We think we want to be a dominant player in the mandi ecosystem. Not that we don't do there anything already. We do a lot in mandis already, and we have leadership position in about 5 to 7% of mandis. We think if we adopt a different approach, which is digital and a coverage kind of an approach, we think we can actually stand to win given our distribution reach across and across both enterprise loans as well as on the retail individual side. So we want to be a dominant player in the next 2-3 years' time. We're already taking steps to kind of conquer this part of the ecosystem in Bharat banking markets. Nothing can be done without organizing yourself properly. So within the bank, we created, we brought businesses together. We talk to similar kind of customers, and for instance, retail lending in farm finance, gold loans. So cross-sell between all of these customers want multiple things. So a farm finance customer also wants a gold loan. So large number of our gold loan leads also come from our farm finance customers. So we're bringing that all together and under similar verticals so that we could do more and also build capability, which is fungible across business lines, right? So, and we've created a center of excellence, which then connects the entire bank at the back and works with all parts of the bank to provide solutions to the customer. For instance, let's say we work with the affordable housing loan team, trying to improve coverage of markets, trying to improve coverage, the kind of assets that we accept as collateral, the customer segment, doing pilots, etc. So we provide the much required distribution to the rest of the bank in all of these markets, and through pilots, etc. And then we scale those up. So, and that's the entire advantage of having a center of excellence. Accelerating PSL self-sufficiency, and we have seen momentum, but it's an ongoing thing because we need to grow at a particular pace to in line with the bank's growth aspirations so that our PSL costs, etc. are contained. And we want to be self-sufficient. Self-sufficiency is some years away, but we've made progress as we see in the last few years. We have come across these are September end numbers, and we'll continue to ensure and to work across our businesses which are largely PSL accretive. Balaji talked about it in his presentation, and finding solutions for PSL kind of lending in all parts of the business is something that we are focused on. We've heard enough about co-lending. All of you may have heard about co-lending. It's a buzz. It's a market buzz. Everybody is talking about co-lending, large banks, etc. We want to be, we aspire to be one of the key players in the co-lending market, but on the back of only digital solutions. We just built our first digital solution, and we should go live in this quarter with a couple of NBFCs on home loans. The priority here is the priority of the focus here is to go live with only those partners who can bring us assets which we otherwise will not get, or customers whom we'll otherwise not have access to, and which help us build our priority sector lending book. So MSME, weaker sections, and affordable housing loans kind of customers, but all priority sector lending. So that's something we'll do. We would perhaps be live with a few partners by end of this year. Our first partnership should go live by end of this quarter. All of this has to happen on back of digital. We recognize that we cannot build a product-centric model in these markets. We have to build a customer-centric model, and taking information once from the customer and using that information for underwriting the customer for multiple products or assets or liabilities is something that's very, very important. And that's something we have already invested in the last few months, and we are going to invest more in building a large scale tech stack for providing seamless journeys to our sales partners or employees as well as our customers, so that we empower all these three players in our supply chain with information, with tools that they can use themselves to to do more. I was explaining to some people, for instance, enabling the VLE network to sell cards at their setup. So you have a VLE shop and you want to sell a card. We will just enabling sale of a card at a VLE store by the end of this quarter. So that will add to the acquisition momentum of the cards business. But the card can be processed at the VLE shop. I mean, that's the beauty of it. Otherwise, it will not be cost effective. If you have to put a sales guy on top of it, it will not be cost effective. So the platforms that we're trying to build at the center will actually bring all the information together to be able to do more with the same clients. Liabilities growth is a big opportunity for us, and Ravi is going to talk about that in his presentation. We think we need to do more. We've lagged the market in the last few years. We think that as we do more and more asset solutions to the customers in these markets, especially the lower end products, we will we'll start getting more liability share in these markets. We will also think that by getting more reach through some third party providers, through VKYC or eKYC, Sameer talked about it, we can actually increase our run rate to 5x from where it is today. Without strong risk and compliance framework, it can't work. Strong risk and compliance framework, a strong operating rhythm around reviews in the business for collections and risk, guardrails, etc. And we're seeing a benign kind of flow for the business, and as the market develops, we'll see how it goes. But right in this year, we've seen a decline in our credit cost for the business. Lastly, I just want to say this entire initiative is bringing one axis to our customers. We want to do more, but we want to do more with less. We want to optimize our cost to income ratios. We want to optimize our turnaround time of the transactions and optimize the risk in the business, but at the same time continue to grow at a faster clip than the rest of the industry and the bank. So our ambition is to double the balance sheet from RUSU markets, self-sufficient in PSL, bringing an end-to-end digital delivery model, and scaling up multiple ecosystems in Bharat banking. Thank you very much. Any questions? Happy to take. Yeah.
Especially on the SME segment, and there's a lot of growth across. So whether it's banks or very small lenders, and there's very rapid growth.
Yeah.
How long can that continue without risks emerging? And where is all the growth coming from? Because it's happening at a very fast pace. You did explain some reasons, even market share acquisition, but how long can it continue?
I'll take that in two parts. One, the first question is how long can that continue? I mean, it will continue as long as India keeps growing. Right? It will continue because if India grows at a particular pace, this market is likely to grow at a faster pace. With more capex inducing initiatives by the government, which is priming up more investments in this sector, we think that it's important for the country to continue to develop these markets. Otherwise, if these guys are left behind, there'll be some other challenge that the country will have. So I think they will continue to grow. We are a 4% or 4-5% odd market share player in these markets. We have enough headroom to kind of grow ourselves. Okay. The risk manifestation, the economy does depend upon a lot of external environmental factors as well, weather, for instance, being one, the farm incomes can get impacted. So there could be some cyclicality or some seasonality or some one-off things that can happen in multiple years. But as long as your underwriting models which are robust and you keep recalibrating those models, etc. With 4% market share, I'm not worried about finding the growth in these markets for us. Or and you also must realize that only this some percentage of the market is formal credit. Large part of the market is also informal credit, local lenders, etc., etc. And that has to continue to move to this side with the formalization of the economy. So I would not hazard a guess and say it will continue to go in one direction, but next 3-5 years look good to us.
And there were media reports last year on, it was speculation, of course, that you could be looking to acquire something in microfinance. So any thoughts on inorganic?
So yes, of course, there was media reports last year. So our position on that is that if there is something good which comes up, we will review. But at this point in time, there is no such transaction or discussion that is underway. But if something good comes up, always happy to look at transactions which are accretive for the bank, gives us at least a couple of things. One of which is to give us more skill or expertise in that particular area, or reach that if I can build which I already don't have. Or third, it has to be PSL accretive. And if something comes up, it has to be some business which is well run, which is generating good returns for the customer. But as of now, nothing. Subrat, right answer.
This one. Hello. Yeah, so a lot of the sessions are interconnected. So I'll just request you guys to hold on to the questions for now. Let Sangram present, and after that, Subrat and Sanjeev present. And we are here to sort of answer all your questions, or else I'll have to duck the minutes from your break time. So, yeah, thank you.